The ETF market is oversaturated in terms of the number of products. I think product proliferation there is a real challenge. I don't think it's a good thing for investors. You know, we're seeing the most esoteric kinds of funds created. That's just not going to do anybody any good. Fortunately, if you look at where most of the activity actually is, it's in the broader-based, highly diversified ETFs. You know, the top 20 or so really dominate the marketplace, and those are great building blocks for long-term investors. And you know, for me, that's been actually the sea change that's occurred in the last decade. You know, when ETFs were first introduced in the mid-90s, and you'll see lots of commentary from that era, people looked at them as just a trading vehicle. In a sense, they were a substitute for derivatives. And so why would a long-term investor be interested in them? We're seeing many long-term investors now use ETFs in a portfolio in lieu of a traditional fund. And they're just picking the structure because they think it's easier to work with, but they're not traders by nature. And I think that's been a huge change, and one that's really benefited the investing public. You know, so many more people now are using indexing as the basis for their long-term portfolios versus just 10 years ago.